Hello, dear energy sector friends. My name is Deniz from Edgy, and I hope you're doing well. Let's have a US crude oil price prediction and forecast this week after the attack on the Saudi oil of Saudi Aramco by the Huthi rebels and also the Fed interest rate cuts. I want to show you what we were looking at before from the technical. So we're going to do technical analysis, look at what was going on before and what happened this week after those fundamental issues were going on. So very important, my dear friends. So I've been posting this in the last few weeks. As you can see, the last one was double equilibrium. We had been tightening already. This is perfectly visible. This goes basically back to last year in October when we came to those highs at 76, as you can see. Okay. And basically then completely dropping off towards the end of the year up to the lows of 42.4. And then we, since then, have a beautiful equilibrium pattern going on. And the equilibrium is a tightening in the price, which eventually sees a guaranteed breakout coming. So it never stays inside the equilibrium. You will always see a breakout coming. The beautiful thing is if you can trade, if you're a trader, you can play in both directions and you can profit no matter what. So if you now look at this, we have the perfect tightening. Then we are coming to the upside with the VIX of 66.5 here and with the low region, which is pretty obvious at the 50 psychological. And now we had even another lower highs at 60 yet again. This is all on the weekly. And we were even upholding a little bit more higher, okay? I would say at the 53 here. If we now zoom into the daily chart and let's get the drawings in here, you can perfectly see, okay, since the bounce from those 52, from the 52 region, we have a nice, descending channel here, a nice basically descending bullish channel. And inside this bullish channel, guys, albeit we had a few, false breaks, we had then eventually a very, very nice horizontal tightening equilibrium. So that's why I gave the title double equilibrium, because we had it even on the daily eventually. We saw a fake breakout, okay, basically a false break happening already, okay, as you can see, September 9th here. So well before the attacks now happened. But just have a look what happens then. So we are getting the false break. We are getting back into the equilibrium zone. Okay, the equilibrium zone goes from 57 to essentially 53 here, 86, and so almost 54 psychological. So we are getting back into the equilibrium range, and then the attack happens. Just have a look at this. Okay, just basically fundamentally we get a spike of 15%. The thing is, we then basically come completely down. If we go to the weekly, we will see this whole price action now, completely retracing. Have a look at the huge and ugly upper wick here. Okay, so what does it mean now? Because that's important. It is not a clear break yet. In order to see the break of that beautiful equilibrium, we would definitely have to break, and which we have done, break above 60, but hold it, okay? We would have to hold the zone in order to, for example, see further, upside potential up to 64, basically 65 psychological, and even up to the previous highs. So that's the prerequisite here. We would have to hold it, but now we have completely retraced back again here. So it was just a reaction to the attacks there. We can see it perfectly on the daily with an inside bar completely coming crushing down. So because of that huge candle we have now, obviously. But have a look at this. So in the best case scenario, guys, the bulls are now going to wish to hold the previous resistance. Okay, so the bulls are not going to wish for this zone to be made an SNR zone. So what is an SNR zone? It is a support and resistance. Okay, so what was previously in this case resistance, the bulls are going to wish for it to become now support. If the bulls cannot uphold this region, okay, so if we cannot uphold this region, if we just see a, so the bulls would wish for obviously a bounce going on from here to the upside, and then maybe even tighten another time and then see a bullish breakout. It could be, cup and handle form. It could be a prolonged equilibrium. But if on the other hand we see like a weak bounce, okay, we do something like this and then whatever, like we come back to the zone again, this would be very bearish, because the bulls have, through the attacks now, through the fundamentals, they would have the chance here to see actual follow through. So this is the case. Pretty crazy what is going on. Full disclosure, guys, I'm not trading oil personally. I'm still mostly on crypto, but it is one of the most important markets. So I'm definitely looking at gold. For the ones who don't know it, I had lost all my money with gold CFD trading back in 2012. So the commodities market is one that I'm definitely looking at, which is very, very interesting, especially the shifts that are going on here. But yeah, so in any case, a big break is coming. The question is now, so out of this big equilibrium, the only question is, was this attack the already the beginning of that? It's very hard right now because we have hugely retraced since during the week, so we couldn't uphold the zone, and we are since then basically between 60 and, as we have looked at, the 54 again, to the lower band. Obviously it's 50, so essentially it's 50 and 60 psychological. Whenever we see a break out of those ranges, we will have big follow through potential, because then the market will have made not rather a fearful but a rather prolonged decision, and which will basically hold for at least the coming months, if not even years then. So that is it to today's crude oil analysis. I hope you had some value. If it was so, smash the like button. Make sure to subscribe to follow me so you don't miss out on the important oil, gold forecasts, price predictions, and I wish you a beautiful weekend. It's very sunny in Munich right now. I say adios, amigos, no matter where you are on this planet, and see you.